Hi, everyone. Thank you for joining us today. I'm here to introduce the panel of finance, who has been at the dialogue many times before, and we're fortunate to have him here today. After years of record economic growth in Colombia during the commodities supercycle, GDP growth slowed last year to 1.8%. The economy faces a number of challenges at a time when the government is looking to minimize the fiscal deficit. Global oil prices have started to recover, but remain well below their pre-2014 highs. And oil production declined by about 15% since 2014, while prices of gold, platinum, and silver have also plunged. A recent appreciation of the peso is hurting exports, particularly in the key coffee industry. And in this context of budget constraints, the government also has to cover a number of new long-term expenses. As a result of the humanitarian crisis in Venezuela, more than 500,000 Venezuelans were living in Colombia as of 2017, and that's a 62% increase just from the year prior. And although the peace accords are ultimately expected to result in lower security costs and stronger economic growth, in the short term, there are significant costs for the government in order to implement the agreement, fund education, roads, electricity, and other services in former conflict zones. And at the same time, international donors are calling for more transparency and efficient use of the funds. But despite these challenges, Colombia's economy is expected to grow by 2.7% this year, thanks to a modest rise in global oil prices, stronger demand from the private sector, and the implementation of the large 4G infrastructure program. So with elections coming up on May 27th and the new government taking office in August, achieving the fiscal target while covering costs will be a major challenge for the next government, but we still have several more months with much to accomplish in this government. And so in order to discuss some of these issues, I'm very pleased to here at the dialogue, we're pleased to host the Colombia's Finance Minister, Mauricio Cárdenas. He's the Minister of Finance and Public Credit, and before this position, he's held a number of different positions in government. He was the Minister of Mines and Energy, the Director of the National Planning Department, the Minister of Transport, the Minister of Economic Development. He's also had a stint in Washington as a Senior Fellow and Director of the Latin America Initiative at the Brookings Institution, and he was Director of FEDesarrollo, which is Colombia's most prestigious economic research institute. So welcome, and he's going to give a presentation, and then we'll have time for dialogue and questions from the audience. Welcome.
Thank you. So I'll try to be as brief as possible in the presentation so that we can move to the conversation. And I'll leave the more topical issues for that conversation. I'm sure you are interested in knowing a bit more about the current situation with Venezuela, the issue of the migrants, and all the other issues of the day. But let me take some perspective, because I think this is the last chance I have to deliver a presentation as finance minister here at the Dialogue, an institution for which I have great respect. It was a partner institution. I was working at the Brookings. We organized a lot of activities together, and I really do have a strong appreciation for what the work of the Dialogue means for the region, and especially for Colombia, that is so well represented here. And that has been so much the center of attention for a lot of the activities of the dialogue. So let me spend this first few minutes telling you what has happened in Colombia on the economic and the social front in these past 8 years, and essentially during the Santos administration. One of the most visible aspects of the economic situation in Colombia in the last few years has been this shock that we had to face as a result of the decline in oil prices. It was very significant. You were alluding to FEDesarrollo, Colombia's economic think tank, and FEDesarrollo recently wrote about shocks to the Colombian economy in some historical perspective. And given the magnitude of this recent shock, what Fedesarrollo says is that there are only two other events in our history of similar magnitude. One is the Great Depression of the 1930s, and the other one is the Civil War that we had at the turn of the 19th century, which is the war that was called the War of the Thousand Days. On those two occasions, as it was in the case in this past few years, we lost almost half of our exports. This is what happened in Colombia with the decline in oil prices that began in late 2014. So, as you can see from the numbers in this chart, oil exports were almost $28 billion in 2013, fell to $8 billion in 2016. They recovered a little bit last year. They're going to recover even more this year. But this was a shock in which we lost 70% of oil exports. And in total, for the country as a whole, we lost 50% of our exports because the decline in oil prices also had a heavy cost in terms of our trade with Venezuela and Ecuador to oil-dependent economies. We lost 1/5 of the revenues of the central government of Colombia. We used to collect taxes from oil companies. Oil companies at one point were not giving any profits, so they didn't pay any corporate income tax, and dividends from Ecopetrol, which is owned by the government of Colombia. 88% of Ecopetrol is in the hands of the government, so we lost those dividends as well. So we lost 1/5 of the revenues. That's 3.3% of GDP. That was a major fiscal shock or a fiscal consequence of the shock. And we also lost FDI, foreign direct investment. There was $5 billion in 2013 in the oil and gas sector. It fell to $2.4 billion. It recovered a little bit last year. But this was the magnitude of the shock. And to illustrate this, this in the comparisons that the IMF usually has was the severest shock in the region in terms of the decline in the terms of trade. Now, fortunately for us, we had a well-prepared economy, an economy with strong fundamentals and a strong macroeconomic policy framework. One of the key components of that macroeconomic policy framework is a flexible exchange rate. So we were able to absorb part of the shock of the declining oil prices with a very significant depreciation of the Colombian peso. Colombian currency was trading at about 1,800 pesos per dollar for a number of years, and it very rapidly moved to 3,000 pesos per dollar. It was a very sharp depreciation. But it was a necessary depreciation because we were running a very large current account deficit. Colombia is a country that in normal times has had a current account deficit of about $10 billion. And very suddenly, the current account deficit doubled to $20 billion. That was unsustainable. It was more than 6% of our GDP. We had to close that current account deficit, something that fortunately has been accomplished. So we have a current account deficit that is, again, below 3% of GDP. So the exchange rate helped us a lot. When we were dealing with this situation, a lot of people criticized us because, of course, with a weaker currency, a weaker peso, our dollar value decreased. The value of our salaries, the value of the real estate in Colombia, the value of Colombian corporations in dollar terms fell. That's why one of the most prestigious magazines in Colombia, weekly magazine Semana, had in its front cover, when that was happening, a headline saying, "Nos empobrecimos." So that means we became poorer. And yes, we became poorer when we measured ourselves in dollars. But that was necessary as a mechanism for adjustment. Of course, such a large depreciation has side effects. And one of the side effects was the acceleration of inflation. We used to have, part of our macro policy framework, a very controlled inflation between 2% and 4%. That's the inflation target. But with the depreciation of the currency, of course, the cost of imported products increased. Those are part of our consumer basket, and that, of course, generated more inflation. And the central bank had to respond to this higher inflation rate by raising interest rates. So that was a way of cooling down the economy to bring inflation down. And I have to say that we're very happy to see that inflation is back within the range between 2 and 4%, and it's actually very close to the midpoint of the range, which is our specific inflation target. It's 3.1%, the last figure, which is the March figure, which means we have accomplished this other objective, bringing inflation back into its target. Now, what about the results in general for the economy? Well, the economy kept generating jobs. Back in 2013, when we were at the peak in terms of oil prices and oil production, we had 21 million people employed in Colombia. Now it's 22.4 million people. Means we have been generating more jobs despite the shock. Our investment rate, that's the ratio between investment and GDP, is still 27%. It's the highest in our history. It's one of the highest investment rates in Latin America. That means that there is investment confidence, or investors' confidence, if you will, which has not declined. And the economy that had been growing at rates close to 5%, it's now growing at lower numbers, as Lisa mentioned. But it's in the process of recovery. This year is going to be better than last year. Next year is going to be better than this year. The economy is growing again. And it never declined. We never had a recession. We never had a GDP contraction. Just growing at a lower pace. But given the magnitude of the shock, that was not a small achievement. But the most remarkable outcome in terms of economic and social results in Colombia has been the continued progress in terms of the reduction of poverty and inequality. You would expect, and many analysts, including here in Washington, said that when the terms of trade shock affected the region, Latin America, some of the results that we had seen in the previous decade in terms of the reduction in poverty were going to be reversed. We were in Latin America, we were all very proud and we were very outspoken about the idea of the enlarged middle class, but to a great extent, that was the consequence of high commodity prices that gave governments the ability to expand their social programs. And many were concerned that with a reduction in the terms of trade, less government space, less fiscal space, we will see a cut in those social programs. Well, that didn't happen in Colombia. We were able to continue with the improvement in social indicators. If you look at the chart, you have a reduction in poverty. That was 30% of the population in 2010. Last year is 17%. And this is the multidimensional measurement of poverty, which includes not just income, but includes also educational attainment on the part of the household heads, the quality of the materials in which the dwelling is built. It includes aspects related to sanitary conditions of the household. I mean, a number of variables that are important in measuring poverty. Or look at the unemployment rate, which was in the double digits at the earlier part of the decade, still much lower than it was then. And the Gini coefficient, to measure inequality, has continued to decline, meaning that we have not a reversal in terms of the reduction in economic inequality. Also, very significant transformations in the labor market. As has been so common and so generalized in Latin America, our labor market was very informal, meaning most of the jobs did not have any kind of social security attached to them. There were no formal contracts between the employer and the employee. If you just look at the main cities in Colombia, at the beginning of this decade, almost 58% of the jobs were informal and 43% formal. Now, for the first time, we have more formal than informal jobs in our cities. This was the result of very significant and difficult to enact tax reform that cut payroll taxes. We had a lot of information and expert analyses, papers, books produced. One of the main constraints on formal jobs in Colombia was very high payroll taxes. So we took action and we decided to cut those payroll taxes, and that generated a tremendous dividend in terms of the generation of formal jobs. Not just formal, but jobs that are being occupied by better trained individuals. Our tertiary education enrollment moved from 37% in 2010 to 52% last year, which means that we had a dramatic increase in the number of students enrolled in technical and university education. And the job market is reflecting that the people that are taking jobs have more educational attainment. This is a very important result. And again, what I want to highlight here is that this was not interrupted by the oil shock, that we were able to continue making this progress. How did this happen? Why was this possible? Of course, if you lose 1/5 of your revenues and you are strict in your fiscal accounts, you have to cut expenditures. So we decided to cut expenditures with a strategy that we called intelligent austerity. What the intelligent austerity means is that we decided to cut in all areas of government activity, but except in those that had the highest impact on growth, that means infrastructure, and those that had the greatest impact in terms of the reduction in poverty. So we protected those sectors, we cut everywhere else, and this is what we were able to continue making progress in these fronts. Now, at the same time, we had a lot of complaints from the corporate sector about their taxes. We were not ranking well in the Doing Business report in terms of tax competitiveness. One of the areas in which the private sector in Colombia was more adamant about was on the wealth taxes. The government had introduced a wealth tax back in 2002 to pay for increased military expenditures. We kept that wealth tax in the earlier part of this decade, but we decided to dismantle the wealth tax. So this year, there's no wealth tax, and the wealth tax has been eliminated from our tax code. As I mentioned, we cut the payroll taxes almost by half, and we're in the process of cutting corporate income taxes. The corporate income tax in Colombia is going to be 33% rate next year. Of course, it's a relatively high rate if you compare with what was now decided here in the United States, but it's a tax rate that allows us to generate the revenues to comply with our fiscal rules. So cutting the corporate tax rate is something that in the future, if a government decides to move in this direction, will need to be offset by additional taxes elsewhere or extra reductions in government expenditures. How are we doing in terms of foreign investment? So many people said, well, with the decline in oil prices, Colombia is going to lose most of its FDI. And, at the peak level, when we were having the highest oil prices, Colombia received about $15 billion in FDI per year. And almost half of that came from the oil and gas industry. Yes, it is true that we lost FDI from the oil and gas industry, as I showed before. But what's interesting is that the non-oil and gas FDI increased very significantly. So we're now back in levels of FDI which are close to $15 billion per year. And this is because more companies are coming to Colombia to operate and invest in the agribusiness, in tourism, in banking, in retail, in transportation, in the IT sector. So we have more foreign investment in those sectors than we had before. And one aspect of foreign investment that has been particularly dynamic is the foreign investment in portfolio assets. That means equities, bonds, treasury bills. Just to give you an idea, when I became finance minister in 2012, only 3% of the stock of our treasuries, the government treasuries, was held by foreign investors. Now it's 26%. So there are more foreign investors willing to buy Colombian bonds in Colombian currency than ever before. And this has also meant greater capital arriving into Colombia. I'm an economist, as you can tell, and when I was more actively producing papers and writing and doing research, I was very interested in the main constraints to economic growth in Colombia, why we hadn't grown faster. This is a long literature, and there are many, many papers, and there's a very interesting literature about this. And the results of those studies, which were undertaken mostly in the last decade, showed that Colombia had two major constraints on its growth, on its long-term growth. One was conflict, and the other was lack of adequate infrastructure. So those were the two main constraints. For other countries, there are other constraints that are different. In other countries is access to finance. In other countries is a very closed economy. I mean, there are different ways of diagnosing constraints on growth. But in Colombia, this came as the consensus view. And of course, we said, well, we have to deal with this. And we have to deal with this in a way that we unbottle, uncork these constraints, these bottlenecks on growth. Peace was a key element, a key part of the strategy. So, President Santos was very consistent in the idea of ending the conflict with FARC, ensuring that the negotiations concluded in a successful agreement. And at the end of the day, this means FARC giving up their arms and converting from a guerrilla organization, an illegally armed group, into a political party. That has taken place. That has occurred. FARC gave up their arms. And look at the consequence of that. The security indicators, for example, the crime rate, the homicide rate. It's now 24 homicides per 100,000 population. This is more or less the level that Colombia had in the earlier 70s. It means a whole generation of Colombians have never lived in a country with such a low homicide rate. 24 is pretty much the Latin American average, still quite high for world standards. But this is a significant improvement in security conditions. But it's not just that. It's also that peace will enable very significant areas of Colombia's territory to be used more productively. How is this going to happen? Well, part of it is because of the government allocation of resources. The government is going to focus more on those areas. In this map that you have on the left, the areas in green represent 344 municipalities in Colombia. Colombia is a country of 1,100 municipalities, but 344 are the municipalities where we think this vicious circle of the conflict was more acute. What do I mean by the vicious circle of the conflict? In these areas, you have very high poverty rates, more than 50% the poverty rate. More than half of the population in these municipalities is poor. Second, in these areas, you have very low and weak presence of the state, very low institutional capacity. In these areas, you have very low private investment, almost no jobs generated by the private sector. In these areas, you also have wide presence of illegal economies, like illicit crops. So this is the actual combination of forces that was perpetuating itself during 5 decades associated with the conflict. I'm not going to get here into a long debate about what caused that. Different people in Colombia from different political perspectives have different views of what was the cause. But I think we all could agree that there was actually a vicious circle occurring. And we have to break that. And the opportunity to break that is now that the FARC gave up their arms, so the state can come in, have a stronger presence, but also the private sector. But the private sector is motivated by incentives. So the private sector is going to go there because it sees opportunity, but also because it sees some advantages relative to investing in Bogotá or Cali or Medellín. So what we did is, in the tax reform that we presented at the end of 2016, right at the same time we were signing the peace agreement, we said, for companies that are created in those municipalities, let's give a tax break. So a zero corporate tax for the first 5 years and a reduced tax rate for an extra 5 years. We also said, what about companies anywhere in Colombia making profits, paying taxes? what if they can actually spend part of the taxes they have to pay the Colombian government instead by building public works in those areas? And that's called obras por impuestos, taxes in kind. So those companies, any company in Colombia can actually say, instead of paying 50% of what I owe to the tax authority, I'm going to build this project in those 344 municipalities. We have to bring in the private sector. That's the real piece, bringing economic opportunity to these areas. So the other goal is infrastructure. That was the other bottleneck. So we have the most ambitious, and I say this without hesitation because we've looked at the numbers of other countries. This is the most ambitious road infrastructure program in the world today, in the emerging world today. It's based on PPPs, public-private partnerships. It is a program led by the private sector. It's the private sector that builds the projects. It's the private sector that invests in these projects. The government of Colombia provides some budgetary support because building roads in Colombia is very expensive because of our terrain, our topography doesn't help. But so the government has to step in and say to the road concessionaire, has to say, look, you're going to collect X amount of money in tolls. For each dollar you collect in tolls, the government is going to give from the budget an extra dollar. That's on average what happens. And that's what makes these projects viable. So we have a number of projects. Those that have a yes in the last columns mean that the project has been closed financially. That means banks have been lending to these projects. The others are in the process of financial closing. But this is going to transform Colombia because it's essentially building a network of highways with tunnels and reduced transportation costs, reduced time of the travel, especially between the interior part of Colombia and our ports. Well, the economy is picking up. Retail sales came out very well this past Monday or Tuesday, 5% growth in February. Visitors, tourism is picking up because of it's one of the early dividends of the peace agreement. Much more visitors than we used to have in the past, foreign visitors. Well, exports are recovering, and I'll end with this. The prospects for growth in Colombia look better than those for the region as a whole, Latin America, and also for those of our peers, which is the Pacific Alliance, Mexico, Peru, Chile, and us. I could talk a lot about the Pacific Alliance. It's really a fantastic integration arrangement. We have decided to expand from a traditional trade or free trade agreement into something that is much deeper, including, for example, the integration of capital markets, a topic in which we work with my colleagues, the finance ministers, that we want to ensure that our capital markets are much more integrated, and there are many ways in doing that. One very good example is called the passport of funds, which means that in the financial institutions that provide funds, pension funds or mutual funds, anyone who has a fund in one of the 4 countries can actually distribute it without going through the registration in the other 4 countries. So it can be distributed in the 4 countries of the Pacific Alliance. This is just one example of the things that we do together. Let me give you another example, which is it's path breaking. Very little coverage in the press, but very important. One aspect that we have in common in the 4 countries of the Pacific Alliance is the presence of the San Andreas fault and the fact that in all our countries earthquakes are rather common. So the world has designed ways in which to cover against earthquakes. There's a way, for example, to issue bonds that are against catastrophic risks. So, and this is done, for example, by the state of California. So we decided to issue together, the 4 countries of the Pacific Alliance, a catastrophic bond that insures us against earthquakes. So if an earthquake occurs in Mexico, Mexico gets the compensation. If an earthquake occurs in Chile, Chile gets the compensation. But by diversifying the risk, we got a better deal. We got a better deal, for example, in terms of the premium we pay for that bond than the state of California. And this is it just shows the the commonality, if you're able to have your teams work together in such a specific thing, it means that you can work together on many other things. And we work together on a number of other fronts, like coordinating our macro policies, ensuring that we have always a continued dialogue between the four countries. And this has been very, very positive for our economies. So we're very proud of the Pacific Alliance. But to go back to this final slide, we're going to grow faster. That's what the IMF says, and the region, which is the green line, and the Pacific Alliance countries, which is the blue line. So that means Colombia has great prospects and great potential. Colombia is moving in the right direction. So I'm sure you have questions about the elections. Are the elections going to challenge this? Is Colombia going to change its economic model? Is Colombia going to move to another strategy? I really doubt that. For one particular reason. You may agree or disagree, or you have different views, political views, but this model is providing good outcomes. It's providing the right results. It's making an economy more resilient. It's an economy that provides more social progress. It's an economy where Colombians are moving forward. And with the prospects of benefits of peace in infrastructure, I don't think Colombia will change tracks. This is more of a relay. We move the post to the next runner, and the next runner, I'm sure, it's going to make an effort to run faster, but to remain in the same track. Thank you.
Thank you for that optimistic presentation. We don't always have such optimistic presentations here at the Dialogue. And it's good to know that Colombia's economy is on track for strong recovery and even, as you said, remains sound even during the drop in oil prices. I just want to ask one or two questions before we take questions from the audience. One is going back to what I mentioned in the opening remarks about the Venezuelan migrants. So this is a very recent phenomenon, at these levels. And Colombia is the country that's seeing the largest increase in migrants. So what is the impact for the economy, and is the country really prepared to take in all these migrants economically? What do you think?
Well, this is the main question of the day in Colombia, and I'd say there are three aspects to the Venezuelan crisis. One is the humanitarian crisis. The humanitarian crisis is being reflected not just in Venezuela. We all know the numbers about the skyrocketing figures in terms of poverty rates, but it's also being reflected in the migration to Colombia. So what's going on with the migration flows is that I don't know how many of you have this in mind, but when I heard about these figures, I was certainly shocked. We have 7 crossings between Colombia and Venezuela, 7 crossing points. In the 7 crossing points, on a daily basis, there are 45,000 Venezuelans crossing. One of these crossings is in the city of Cucuta. And just in Cucuta is 35,000 crossings per day. Doesn't mean that everyone crosses and stays in Colombia. A lot of people cross the border and return to Venezuela at the end of the day. They come for generating some income or to buy basic necessities, but there is no border in the world where you have daily crossings of that magnitude. So this is the most active border in the world. Second, last year, there were 170,000 immigrants into Europe from the Mediterranean. 170,000. In Colombia, from Venezuela, there were 350,000. So more than the whole flow of migrants to Europe. Twice that figure. That just gives you also the magnitude of this. And let's talk about this year. Just in the first 3 months of this year, 200,000 Venezuelans crossed our border with Ecuador. They moved south, which means that the problem began in Colombia, but is moving also to Ecuador, Peru, Chile, Argentina. So this just shows that this is no longer localized just in Colombia. But let's talk a little bit about the issue in Colombia. Colombia has about 700,000 Venezuelans or Colombians that were living in Venezuela that have migrated to Colombia. 700,000. Of the 700,000, about 300,000 are legal, means registered, means that when they crossed the border, the passport was stamped, or that they had this temporary document that allows them to cross. 300,000 out of the 400,000. The other 400,000, it's an estimate that we have, or what we think is an illegal crossing of the border. 700,000. In these 700,000, we are now conducting a census. It is very important to have information about who the migrants are, what are their basic demographics, socioeconomic characteristics. The census and the registry is underway. It has no migration consequences. It is not something that's going to be used for migration purposes. It's just to understand and identify the needs of the Venezuelans living in Colombia. Let me give you one fact about what we know so far of this registry. The average family size of the migrants, the Venezuelan migrants, is two members of the family. So it's either a parent and a child. Normally the other parent stays in Venezuela. And the other children stay in Venezuela. So it's just two members of the family. 100 and we have administered about 130,000 vaccines to Venezuelans coming into Colombia, because there is a real health concern. We are providing free emergency care attention in our hospitals, and we are providing free education. So any children of these migrants that is in the schooling age has access to our public schools. About 30,000, that's the Ministry of Education's report, 30,000 Venezuelan kids are attending Colombian public schools. So it's a major issue. How are we doing this? With our own budget, with our own resources. It's a very small figure of what we're getting in aid. We got an announcement by the U.S. government about $16.5 million from the U.S. government, split between Colombia and Brazil. But most of this is Colombian support. Why? Why are we doing this? We are, literally speaking, siblings. Because there are many Colombians that have lived in Venezuela. In many cases, same family. So this is two countries that are really, really strongly connected. So the solidarity is a key, crucial element here. But of course, we're concerned about the future because this can get worse. So to make a strong case here is the international community should pay more attention to this. It's a much bigger problem than what people perceive at first sight.
And it seems like it's only going to get more.
And I think more countries are going to start saying the same thing. You're going to start seeing other countries worrying about this, because 200,000 Venezuelans crossing in our border with Ecuador, we call it Rumichaca, it's a huge figure.
Well, let me take some questions from the audience, and please just introduce yourself with your name and affiliation. Let's start over here.
Thank you. Maria Paula Carvajal, Goldman Sachs. After the oil shock, what has the government done to diversify the economy to just prevent going forward this kind of shocks and to increase productivity other than the 4G?
Let's take 3 questions so you have some time. There's one over here and over here.
Hi, Annabelle Teixeira with FTI Consulting. I was wondering about the Colombian decision, the OECD's decision to integrate Colombia into the organization, which will be made next week on April 24th. What do you think will happen, and do you think Colombia has implemented the necessary reforms to participate in the organization?
Hi, my name is Daniel Sierra. I'm Venezuelan. Besides the current situation of crisis that we're having right now, what is your perspective for the future of an economic relationship between Venezuela and Colombia, and how can this economic recovery of Venezuela in the future also help the Colombian economy in the future to come?
Let's take one more. Sergio.
I am Sergio Vitar from Chile, Inter-American Dialogue. When one looks at Colombia from other Latin American countries, what you have done with President Santos in terms of not only facing this economic shock, but the process of peace, it's a major result. That's how we see, and for many Latin Americans, it becomes very difficult to understand why in Colombia perceptions are so different. My question is, what you started as minister, you said 2012, Minister of Finance, and with the president, the rest of the leaders of the government. What was the perception you had about the process compared to what it happened? Because that's very important to understand how to govern those kinds of processes in other countries. And also to see how can you project these things for the next 2, 3 years, 4 years. What problems that you didn't see will appear or will be longer. That's my question. Thank you.
Thank you very much.
Can I just expand on the diversification question? Because I had the same sort of question. There's a debate in Colombia right now, especially in light of the presidential elections, about whether the country should focus on recovering the oil sector and the mining sector and what should be done. And then at the same time, people who are saying you should move away from fossil fuels, maybe even not depend on them at all anymore. Do you think that it's desirable or possible to reduce or even completely eliminate the dependence on the oil and mining sectors?
Well, very good questions, all of them. And each one of them can actually be the topic of a whole lecture.
And you have 6 minutes.
A whole conference. I only have a few minutes. So let me try to be selective and brief. Diversification is a necessary attribute of an economy, and we should ensure that our economy becomes more diversified. There are a number of factors that can help that diversification. It's not something that can actually take place very fast, unfortunately. But the depreciation of the currency is very important because it has made more competitive other sectors of the economy that were heavily affected during the high commodity prices years. And I'm talking here about manufacturing, agriculture. So for them, it has been a relief. The construction of the infrastructure plan that you alluded to, it's also going to help diversification. Peace is going to help diversification. It's going to bring economic opportunities to the rural areas that were more affected by the conflict. So all points in the direction of a more diversified economy. But it takes time. Figuring out those sectors, ensuring that there are some sectors that can actually grow faster, it takes time. One sector where we're already seeing the benefit, as I mentioned before, is tourism, so the economy will be more diversified in that sense. But to go from there, to conclude that we can actually ignore or move on without a strong energy and mining sector is a complete misunderstanding. I think Colombia needs, for many reasons, a strong energy sector. One reason is our foreign exchange. I mean, we need the revenues from the oil sector. The idea of higher profits in the oil sector is bringing fresh air to the Colombian public finances outlook, because it means we're going to get not the levels that we used to get in terms of revenues to the government, but something better, something higher, which gives more space to the government. So we need a strong oil and gas industry. We need a strong mining sector, and that means we need policies that are friendly with those sectors. But at the same time, we have to keep the standards, environmental, social, procurement standards in those sectors. So it's a balancing act. But the idea that we can actually be successful without those sectors, I don't think it's a valid one. 2, OECD. We've done our homework. I have been designated by the president as the person that has the responsibility. This is a coordinated effort with many other ministries, and this is not something new. We started the accession process formally, not informally. The president said he wanted this when he first was inaugurated, but formally, we've been in the process for 5 years. There are 23 committees. Next week's committee is our last committee, the trade committee. We've done our homework. We think we've done everything that is necessary. And that means that we're very optimistic that we can conclude the process. And by the way, we see this not as being a member of because many people misrepresent this, but we're not saying this as being a member of the rich countries club. It's not being developed. That's not what it means to us. It means being part of an organization that produces the best standards, the best practices, that adopts the right policies or gives the right recommendations about how to accelerate development. And being part of that organization is valuable in itself. So we're optimistic about it. It's not in our hands. It's not our decision. But we think we have done the necessary work to be there. And this is a number of reforms we had adopted throughout the years. Many of them are, people don't even talk about them these days because they're done. For example, we needed to regulate the financial conglomerates. Financial conglomerates in Colombia were not supervised, were not regulated. Now they're regulated. The ministers are out of the boards of Colombian publicly owned enterprises like SOEs. We're not in the boards anymore. We're not in the board of Ecopetrol. We're not in the board of any government-owned bank. That's another OECD recommendation. So a number of things in many, many, many fronts. Venezuela. So I talked about the humanitarian aspect, the humanitarian crisis. Let's talk about the future. So what the future involves is that I personally think that Venezuela does not have a solvency crisis. It's not that that Venezuela is not a rich economy. The contradiction here is that Venezuela is a very rich country, but very badly managed. And with the necessary changes in its economic management, it can be a successful economy. But it can be a successful economy that will need help and will need support. That means Venezuela needs some package of financial support that will allow Venezuelans' imports to grow again. Why do imports have to grow again? Because you need to do two things. You need to supply the supermarkets, and you need to provide the inputs for investment, especially investment in the oil sector. The most remarkable aspect of that mismanagement is to have the reserves that Venezuela, the oil reserves that Venezuela has, to have a production that was at 1.3 million barrels per day, and today people say that the production is 1.6 million barrels per day. So you can increase oil production, and if you increase oil production, you increase economic opportunities in Venezuela. But you need the imports to do that. You need capital, investment, and you need also to supply goods to the supermarket so that people have the capacity to eat. And that needs that means a rescue plan. A rescue plan that is just financing. Venezuela will be able to pay that off. So for a country like Colombia, this is only a gain. That the situation in Venezuela improves, less problems with migration, and more opportunities for the Colombian producers to export to Venezuela. Venezuela was at one point a very important market for us. We lost it completely. It's not. It's a market that Colombia now is not exporting at all. So a huge opportunity there. That's why we speak so much about this plan. We've mentioned a number, $60 billion. That's what we think Venezuela will need to put its economy back on track. But this is, of course, with a change in the way policies are adopted, and of course, with a return to freedom and democracy in Venezuela. So your question, Sergio, is a very challenging one because it's about, I think at the end of the day, in a very diplomatic way, you're saying, well, if Colombia is seen from the outside with such a positive view and the view of what Colombia has done, why internally there is so much debate and controversy and opposition? And I'd say that one aspect of this has to do with the fact that peace agreement, macroeconomic adjustment, however positive in terms of the improvements in living standards in the future, are politically costly. Because to do this, we had to make concessions with the FARC, a very unpopular group. Or to do this, what we showed in the macroeconomic front, we had to raise taxes. We had to raise the VAT. Very unpopular. So sometimes you just have to do the unpopular because that's the right thing to do. And it will take some time for, I think, everyone, especially in Colombia, to fully appreciate that this was the right, that these were the right policies. And we should not judge we should not judge the merit of these policies by what the polls are saying today. We should judge them in 3, 4, 5, 10 years. And I think that the final judgment is going to be very different from what you see in the polls now, because the polls are very short-term driven. That's one aspect of your question. The other aspect is, did we foresee all of this when we began this? And I think the president has repeated this many times. He said, yes, he looked at the peace process everywhere else in the world, and he was quite aware and mindful of the fact that it's more popular to fight a war than to end it with a peace agreement. It's more popular. I think the polls would be higher if we had unfortunately, continue with the military strategy. But that's not the right strategy. That was not the right thing for Colombia. The right thing was to get the peace done and to adjust our economy with tough measures, because otherwise the consequences of not having done those things will be, the history will not judge that well.
Thank you. Well, unfortunately, we're out of time. We almost stuck to the schedule. So thank you so much for joining us. Always a pleasure to have you here, and hope you'll come back next time you're in Washington.
Thank you very much. Thank you very much.